Hello, everyone. My name is Allie Johnson. I'll be moderating today's webinar. I'll begin by introducing the Capital Pathways program, introduce myself, and then pass the mic to our guest speaker, Ford Scott, who is a lender relations specialist based out of the Richmond, Virginia, U.S. Small Business Administration District Office. He'll introduce himself and take us through a presentation on SBA loan options. As we go along, please feel free to ask questions using the Q&A function, and we'll respond to them at the end of our session. For any questions that we don't get to today, we're happy to address through our no-cost one-on-one services or connect you with resources that can help. As usual, we'll share a recording and slides of this webinar afterwards. So, what is the Capital Pathways program? It's a program funded by the U.S. Treasury SSBCI initiative, sponsored by the Virginia Department of Small Business and Supplier Diversity, and hosted by the Virginia SBDC and George Mason University. We'll start with a program overview, then go through program eligibility, and finish up with an outline of the services we offer. Capital Pathways is a no-cost, specialized SBDC program that helps small businesses build the systems and habits needed to become capital ready. This matters because businesses that are less prepared can often self-select out or fail their loan applications. These early failures correlate to a lack of adequate capital, and higher cost alternatives often don't build long-term capacity. Ultimately, only half of the loan amounts requested by small businesses actually reach them. To put things in perspective, about 25% of small businesses need access to financing for growth and preserving cash flow. However, only 20 to 30% of those who apply actually get their loans approved. To help address this challenge, Capital Pathways creates a path to financial and legal readiness. Our program offers an immersive hands-on group experience paired with a one-on-one support. Who's eligible? Very small businesses and nonprofits at any stage who face challenges accessing traditional financing. The services we provide start with a guided self-assessment and include legal structure validation, financial skills and tools, loan application readiness, and credit building advising. As I said, we start our process with a self-assessment that pinpoints your business's key gaps so we can connect you with tailored resources, either through our program or other resources that can help. Under our legal structure validation, our in-house advisors can help you through basic legal questions, and we also partner with a law firm to provide help with more complex topics related to business registration, trademarks, and contract and agreement reviews. We also offer financial webinars, as well as financial statement preparation and QuickBooks training. Our one-on-one tailored support covers business foundations, profitability and pricing, financial forecasting, financing options and readiness, financial statements and tools, and loan readiness and lender preparation. Our loan application readiness services include both webinars like this one and one-on-one individualized support. Other topics our webinars cover include what lenders look for in loan applications, interactive mock loan interviews, and sample application analyses. We also have a partnership with a lender who provides one-on-one support to those looking for capital. Our final offering is a credit building advisor, and they will help you review and interpret your credit reports as part of building an individualized credit improvement plan to strengthen your credit and help you qualify for better financing options and terms. So, all that said, if you're interested in getting started, you can reach out to our website, at virginiasbdc.org/programs/capital-pathways, or you can contact me directly at capitalpathways@virginiasbdc.org. I'll share my email and our website link in the chat so you all have them. Now over to introductions. As I mentioned before, my name is Allie Johnson. I'm today's moderator, and I serve as the Program and Intake Coordinator for the Capital Pathways program. I have a professional background in economic development, small business support, and access to finance projects, both domestically and internationally. Our session today will consist of a 90-minute presentation. And again, please feel free to ask any questions throughout the presentation using the Q&A function. We'll respond to them at the end of our session. For any questions we don't get to today, we're happy to address through our no-cost one-on-one advising services or connect you with resources that can help. Again, we'll share a recording and slides of this webinar afterwards. Now I'll pass things over to Ford to introduce himself, tell us a bit about his background, and start the presentation.
Okay, thank you, Allie. We get my, well, I don't know. I'm just gonna wave to you over here. I'm not gonna keep my camera on. Just to introduce myself, as Allie said, I'm Ford Scott. I'm what they call a lender relations specialist with SBA. Our main function here is to help lenders understand our lending programs and help them move through the lending process. But we often do these events for small businesses as well. So I'm going to turn my camera off and then start the slide deck. Let's see. Okay, there we go. So today's topic is SBA lending programs. You'll see there we have programs that can provide financing up to $5 million. As Allie said, you'll get a copy of this slide deck and some other information that we're going to share with you. So just first of all, I wanted to mention we do not offer grants of any kind to small businesses, either to start or grow their businesses. We do not lend directly to small businesses except under our disaster lending programs. That's where, if there's an earthquake or a tornado or something, we might step in and provide direct financing. So our main function is to be a guarantor. We provide a guarantee to commercial lenders. They actually lend their money to you, and we provide that guarantee, which means if the business borrower defaults, SBA will reimburse that lender for a portion of their loss. And that is our way of encouraging banks. We also deal with credit unions and some small business lending companies, but that's a way to encourage lenders to lend to small businesses. The guarantee can help offset the risk associated with startups. Many times lenders are not comfortable with startup businesses. If there's insufficient collateral, that's probably the primary reason that lenders use our programs to help small business. There might be some non-standard repayment terms or industries that the lender is not comfortable with. Several different factors that might lead that lender to use SBA's programs. So first, I want to cover some ineligible small businesses and uses of proceeds. This is not the full list, but it's the main ones that we hear are of interest. So nonprofits are not eligible under any SBA loan program, well, except our disaster program. But what we're talking about today, none of the programs we'll discuss today allow nonprofits. The other big question that we get on a regular basis is you cannot finance investment real estate through any SBA program. So you'll see some examples here. If you're a developer or a landlord and you do not actively use that space, you're just going to buy that property, let's say, and then rent it out. That is completely ineligible under SBA programs. So that would exclude things like apartment buildings, mobile home parks, where they operate as more like an apartment complex. Not an RV park that's similar to camping. Those potentially could be eligible. But if it's a mobile home park where it's, like I said, basically an apartment complex, that's ineligible. We can finance nursing homes and assisted living facilities as long as they provide additional medical and healthcare services, but just residential facilities where that is not provided are ineligible. You can't finance pyramid or multi-level sales distribution plans. The old example of that used to be Amway. I'm not sure what the current example of that is, but well, I guess they're Mary Kay Cosmetics. I don't know if that's some of those. I'm not up on the latest of that, but those are ineligible. You can't get financing for any activity that is illegal under federal, state, or local law. So as we know, in some states, marijuana has been legalized, but it's not legal on the federal level, so that would be ineligible. You can't have a business that restricts patronage for any reason other than the capacity of the building. So, for example, you couldn't have a men's only or women's only health club. These programs are federal government programs, and they have to be open to everyone. You can't have a business that is currently owned by a person that is currently incarcerated, serving a sentence of imprisonment imposed upon adjudication of guilty, or is under indictment for a felony or any crime involving or related to financial misconduct. And that question is actually on the application. So if none of those apply, you would just say it doesn't, and then you would be eligible. If your business had a prior loss or has a federal debt that is currently delinquent, you would not be eligible for an SBA loan. If you pay off, let's say your business had a prior SBA loan and you pay that off, then you can apply for a new loan. But as long as that is outstanding, you cannot apply. We did just change starting on March 1st our policy related to allowing businesses that are owned by legal permanent residents. Those are no longer eligible. So if any ownership is owned by a legal permanent resident, they're no longer the loan or the business is no longer eligible. SBA will only lend to businesses that are 100% owned either by U.S. citizens or U.S. nationals who have their principal residence in the U.S. So the next three slides just give you an overview of our three main lending programs. This first one here is called the 7A program. It accounts probably at least 90% of our total financing, at least in numbers. And you'll see here, this program can be used for pretty much any legitimate business purpose. So you can acquire, refinance, or improve real estate and buildings. So that would allow you to either buy an existing building or construct a new building. Again, we don't do investment real estate, so your business has to occupy at least 51% of the rentable space if you're buying a building, and then at least 60% if you're going to construct a building. You can use it for working capital, debt refinancing, purchase, installation of machinery and equipment, purchase furniture, fixtures, and supplies. You also can finance changes of ownership, either a complete change or a partial change. We do also allow partner buyouts. Franchise operations are eligible. It's not your responsibility, you'll see this later, to check, but we have a franchise directory where we have reviewed those franchises only for things like affiliation. Actually, they also review it to make sure the franchise is not something that we prohibit. But anyway, the lender's responsible for checking that, but we can finance franchise operations. I said at the beginning, the maximum loan amount is $5 million. The lender is going to look at things, and we're going to get into this in a minute. They'll look at your credit history, your business operation, etc. And the lender will work with you to determine which program is the best to use. We have, for instance, you'll see at the bottom of this slide, an SBA Express program, which is a subset of the 7A program. And then we also have what we call small 7A. So the lender will work with you to figure all that out. It's not up to you to have to figure all that out, but they'll work with you on that. The second main program we have is a 504 loan program, and you'll see here the third bullet down. This program can only be used to finance owner-occupied commercial real estate, so either new construction or the purchase of an existing building. And then it also can be used for long-term machinery and equipment, so the equipment has to have a useful life of at least 10 years, and it's generally something that's put in place and stays in place, so you cannot finance trucks through this. Rolling stock, things like that. You cannot finance that through the 504 program. But the benefits to you as the business owner are that they sometimes describe this program as a 50-40-10 program. A lender will lend you 50% of the total financing that you need. SBA generally comes in for 40%. And on our 40% piece, we provide you a long-term, you can have a 20 or 25-year term with an interest rate, a fixed interest rate for the life of the loan that is generally going to be lower than if you went and got a conventional loan from a lender. So you got the long-term, the lower fixed rate, and then you can also finance some out-of-pocket costs that would normally have to be paid at closing. So there's several benefits to you related to this program. When you get the slide deck here, you'll see the link to certified development companies. They are the entities that you would work with to submit your application, and they actually handle the SBA piece of the program. And then you'll see here at the bottom, you can't use a 504 program for things like working capital, inventory, anything other than the two bullets above there, but you can combine a 504 loan with a 7A loan, and we see that happen on a regular basis when there's a change of ownership, and the real estate will be financed through the 504 program, and the actual business acquisition will be financed through the 7A program. The third program we have is our microloan program. It provides loans up to $50,000. And the way this works is we lend money to nonprofit, what we call intermediaries, and then they turn around and loan the money directly to the small business. You apply directly through that intermediary lender. The financing can be used for working capital, inventory, supplies, furniture and fixtures, and machinery and equipment. It cannot be used for real estate. And generally, if you want to refinance debt under this program, you just need to show that it will improve your debt position and your cash flow. I will say, I think most of the participants today are in Virginia. Each microlender is assigned a territory in which they can lend, and we have some holes that are not covered in the state right now. So we have in the Richmond area, we don't have anyone covering that area, and then we have also in the Hampton Roads area, we don't have a lender covering that area, but we've got one in Southwest Virginia. We've got one that covers sort of the northern area there, Frederick, I believe Clark, Warren, et cetera. And then we've got a lender in the Stanton, Waynesboro area, and then we've got another lender in Charlottesville who will lend down into the south side portion of the state. But when you get this link, you'll see that you can click and you can see if there is a lender, an SBA micro lender in where you're located. So in terms of what to do before you approach a lender, as Allie mentioned earlier, the better that you can present yourself, be prepared and everything before you approach a lender, that improves your chances of obtaining a loan. So we generally recommend that you have a written either loan proposal or a business plan. And I did do a separate webinar on how to prepare a loan proposal. So if you think of the difference between a business plan and a loan proposal, the business plan is sort of the overarching document for your entire business. The loan proposal is a more streamlined document, as you can tell, designed to help you apply for a loan. So it's more streamlined, as I said. We recommend that before you approach any lender, you be able to discuss these 4 items listed here at the bottom. So how much money you need. I usually say that small business lending or business lending is not like auto lending or mortgage lending. So I just bought a car a year ago, and I went to the lender and I said, well, how much do I qualify for? And then they sent back a number. That's not the way that small business lending works. The lender will expect you to come to the table with a specific dollar amount. Now that may be, after you talk with the lender, they may have some guidance for you, and you may decide to reduce that or maybe even increase it, but they want you to come to the table with a dollar amount. Don't ever go to a lender and say, how much can I get? That doesn't go over well with lenders. They want you to come to the table, and then you provide them a breakdown of how you'll use that money. So if you're buying equipment, you should have contacted several suppliers to see what the actual cost of that equipment might be. maybe get some quotes, things like that. But they're going to see a breakdown of that. They'll want to see how you'll repay the loan. That is generally provided either if you're an existing business based on your historical financial statements, or if you're a startup based on projections. And of course, that's the main focus for lenders, because that's if they're lending you money, they want to get repaid. So that's a primary consideration. And then the bottom bullet there, what will you do if your business is unable to repay the loan? So that would be what collateral you're willing to offer, and we're going to talk about that more in a minute. So this question comes up often in relation to business lending, small business lending. Is the lender going to pull a copy of my personal credit report? And generally, most, if not all, lenders will. They will pull a copy of your personal credit report and your score. SBA used to set a minimum score under one of its programs. We've discontinued that now, so it's really up to the lender to decide, or we allow them to decide what their minimum score is. But they will pull that. And then some lenders will pull business credit reports, and you'll see the list here. Actually, I think, so that's personal credit. Equifax, Experian, and TransUnion are the ones for personal. And then you'll see at the bottom here, Dun & Bradstreet, Experian, and Equifax are the commercial credit reporting agencies. You'll see the third bullet here. And I do this myself on an annual basis, you are permitted to get a free copy of your credit report. It won't give you the score, but your credit report once per year from each of the 3 credit bureau agencies. So I do that myself. That's a way for you to see what's on the report, clear up any errors or problems that you see on the report before you go to a lender for the financing. So in terms of what the lender will look for when reviewing the business loan application, they want to see owners and operators of good character. That credit history that we just talked about is a way they gauge that. So have you been willing to meet your obligations on time, over time? They want to see that. A feasible business plan. And Allie, of course, she's with the Small Business Development Center Network, and they can help you with the business plan preparation, management expertise, and commitment necessary for success. So if you would include your own expertise, et cetera, in your information that you give to the lender. But if you decide that you're going to hire a manager, maybe you're not going to be there on a day-to-day basis, you want to make sure that you discuss the expertise of that manager when you provide that information to the lender. Sufficient funds, including the SBA loan, to operate the business on a sound financial basis. Adequate equity invested in the business. Sufficient collateral, we talked about that. And then, of course, this is in red because, as I just said, the lender's primary focus is how they're going to get repaid. So either you'll provide that, you'll show that based on historical or projected financial information. So one question that comes up often related to applying for an SBA loan is, do you apply directly through SBA? No, we do not accept any applications here. You apply through a lender, and we're going to provide you a list of lenders and then one other avenue for contacting lenders later in this slide deck. But you don't come to us, you go to a lender, and they will actually give you a checklist of what they need from you, and then they will come to SBA for the approval. In terms of the paperwork, we're going to go over this item by item. We can't cover everything because, as you can guess, your application may be different, but this should give you a good overview of what the lender is going to look for from you. So here we are, we're talking about the documentation now. So all applications must include the forms and information the lender requires in order to make an informed credit decision. So these items here that we're going to go over now are SBA requirements. Generally, the lender's not going to have much more than this, but there potentially might be something else they want to see from you. But this is just for the SBA loan application. So the first item there, SBA Form 1919, that's filled out by the business. It's signed by one authorized individual of the business, so you don't need it for each owner of the business, just the business itself. The lender will ask to see a personal financial statement from every 20% or more owner of the applicant business and any guarantor if they don't own that 20% minimum. And for us, it has to be signed and dated and current within 120 days of submission to SBA. The statement must include the assets of any spouse and minor children. And if you wanted to get an idea of what would be asked for you on a personal financial statement, you can click this link when you get the slide deck. The lender is not required to use that form, that SBA form there, 413, but it will give you an idea of what they'll ask for if they use their own form. This is SBA specific, this next one. So if the lender decides to charge you a non-SBA fee of greater than $2,500, there's a form that has to be filled out related to that, and the lender will give you that. The lender will ask you to, the lender is required to obtain federal business income tax transcripts from the IRS for the last 3 years or however many years you've been filing, up to 3. And the reason that we asked them to do that is we want to determine 2 things. One, that the business is small, and the most important there, which is why it's in yellow, is the data submitted to the IRS matches what you've given the lender as part of your application. So during COVID, we saw that some businesses, they applied for our direct disaster program, and what they submitted to the IRS did not match what they were giving us when they applied for the application. That's generally considered fraud, unless it's just a minor discrepancy. But so they want to make sure that you're reporting to the IRS the same information that you're giving to them. In addition, if you have business financial statements for the last 3 years, you'll be asked to provide those. If you're a startup, you'll be asked to provide a monthly cash flow projection for at least the first year or until you are showing positive cash flow, and that's where Allie's group can help you with that if you need help with your cash flow projections. You'll be asked to provide evidence of all licenses and formation documents required to operate the business. For example, a business license, articles of incorporation, organization, partnership agreements, etc. You'll be asked to provide a brief description of your business and the history, so the nature of the business, so what industry you're in, the length of time you've been in business under the current management. Again, we talked about your depth of management experience in the industry. And then, as I mentioned, if you're going to have a hired manager instead of being there on a day-to-day basis, you want to talk about their background. So if this information above, that description and history, is in your business plan, you don't need to give the lender a separate document for that. And just one, so if you have, let's say you're starting a, veterinary practice, and you don't have any, that's probably not a good example. Let's say a retail store of some sort, and you don't have, let's say it's a grocery store, but you don't have direct experience in that specific industry. If you have any prior business management experience, you definitely want to include that as well, even if it is not in that specific industry, because that will help give the lender more comfort that you have some past management experience, if it, even if it's not in that industry. So we talked about the financial statements, generally 3 years. They also ask for an interim financial statement that's no older than 120 days upon submission to SBA. And then if your historical cash flow does not show sufficient debt service coverage of the loan that you're applying for and your other debt, then you would need to provide projections in addition to the financial statements. And then we talked about, for new businesses, you would provide detailed projections, including supporting assumptions. I can't remember if we have this at the end of the slide deck, but we have asked lenders for their guidance for small businesses when they're applying for a loan. And one of the things they bring up on a regular basis is your assumptions when you're putting your projections together. So you may have heard the phrase pie in the sky. They don't want you just pulling a number out of out of the sky and saying, well, I'm going to, in my first year, I'm going to have sales of $1 million. That's an exaggeration, but they want to know what your assumptions are, that you've looked at your competition in the area, and your products, et cetera, or service. So those are very important. And again, I don't know if this is later in the deck, but they will use industry data to gauge whether your projections are just too optimistic. They use RMA industry information, which they can compare your projections to actual data from existing businesses in your industry. So they will do that. You'll see the link here for a template, and then I'm sure Ali has some templates there for projections as well, but that's just one template to prepare your projections. Equity injection. So you should discuss any cash equity that you can put into the business, and the lender will discuss what minimum they have. So SBA sets a minimum under our main 7A program. For startups, we require a minimum of a 10% equity injection. And then if you're buying a business, you're coming from the outside of the business, buying that entire business, we also set that minimum at 10%. And then for partner buyouts and partial changes of ownership, there may be a requirement for a 10% equity injection. It depends on your circumstances, but the lender will outline that for you. But beyond that, so I should have said this at the very beginning. SBA sets its box, if you want to call it a box, with our requirements and regulations in it. And as long as the lender doesn't violate any of those requirements, they can set their own policy. So what you'll find, I mentioned the credit score earlier, and with equity injection, they will often set their own policy that they abide by. We don't keep that data. You'll have to contact the lender to ask them, what their minimum score is or minimum equity injection is. And I told you about SBA's requirements. So if you're an existing business, the next bullet here, you'll be asked to provide a current debt schedule, and this would be business debts, where you outline, you'll tell them who the creditor is, what the original loan amount was, when you got the loan, when you received the loan, what the balance is, and then what the status of that debt is. And actually, I'm going to send you an example of a debt schedule that you may use, or the lender may provide their own to you. If you happen to be refinancing debt, you'll need to provide to the lender a copy of the promissory note and a payment schedule showing that the debt is currently current and that it has been current for the last 12 months. If you're renting space, we ask that you provide a copy of your lease, and just an FYI on that. So let's say you're leasing a space for your retail business, any business. We require that lease, including any options to renew, be at least equal to the term of the loan. So if the lender gives you a maturity on your loan of 10 years, you would need to show a lease that shows, again, the original term, and then any options to renew is at least equal to 10 years. We talked about if you're a franchisee, the lender will ask you to provide a copy of the franchise agreement and the franchise disclosure document and any other documents that that the franchisor is asking you to sign. You should tell the lender about any federal, state, or local citations which would preclude you from normal business operations. Discuss any liens, judgments, bankruptcy filings, or pending litigation, including divorce proceedings. A couple of things related to bankruptcy filings and divorce proceedings. So SBA does not have a hard and fast rule where it's an automatic decline if you've had a bankruptcy. What the lender is going to look for is some sort of reestablishment of credit and on-time payment after that bankruptcy. So again, we don't have a hard and fast rule that just makes you ineligible, but you just need to tell the lender the circumstances behind that, and then hopefully show that you have a track record after that bankruptcy. And then in terms of divorce proceedings, if you happen to be in the middle of a divorce proceeding, probably the prudent thing to do would be to wait until it's finalized, because the lender, especially for our larger loans, is going to look at personally held real estate or collateral. And if you don't know who is ultimately going to own that property, then that's going to make it difficult for them. So it's probably best to wait until that's ironed out before you apply for the loan. If you're buying equipment, inventory, or other assets, I mentioned this early, that you'll need to provide a detailed listing of what will be purchased and the cost quotes. Collateral, so that would be a detailed listing of all business and personally held collateral that you're willing to offer. If you're buying an existing business, you would provide a copy of the buy-sell agreement. The second item is not, you don't have to worry about it. It's just for your information. The lender is required by SBA to either prepare internally or go out and get a third party to prepare a business valuation to justify the purchase price. So that cost of that, if they go out to a third party, that cost will be passed on to you. But you do not have to order that. In fact, you can order a business valuation yourself, but unfortunately, SBA does not allow the lender to accept any business valuation ordered by you or the seller. So you can just keep that in mind. You'll need to provide a pro forma balance sheet for the business being purchased. It'll be a balance sheet showing the assets, liabilities, et cetera, as the date of the transfer. Copies of the seller's financial statements for the last 3 years, and then an interim statement, as I said before, no older than 120 days from the date of submission. And SBA, when it's financing a change of ownership, we want to see some benefit to the business. So you'll need to tell the lender, why the seller is selling. We're not really here to provide financing to, if you just have a willing buyer and willing seller. We want an example of a benefit to the business is, let's say you have somebody who's run a business for 30 years, they want to they want to retire. And if they didn't sell the business, they would shut it down. That's a benefit, of course, because the business continues to operate. So you can discuss that with the lender that you're working with. If you're buying real estate, you would need a copy of the signed purchase agreement. And again, this bottom note here, it's not your responsibility, but just information for you. The lender will be required to perform an environmental investigation on that, and potentially, depending on what the uses of that property were, let's say if it was a gas station or something like that, there will be an extra cost because the lender will have to go out and get what is called a phase 1 environmental report. But again, you don't handle that, the lender handles that. Just a comment about loan closing costs. So the lender is permitted to collect from you necessary out-of-pocket expenses. So filing and recording fees, photocopying, delivery charges, collateral appraisals. We talked about the environmental investigation report, and we also talked about the business valuation potentially. So one thing you may ask the lender is, you can either pay those closing costs out of pocket, but many of them will finance that in the loan so that you don't have to pay it out of pocket. So you may want to ask them about that. This came up, we've been doing these webinars for several months, and this question came up, so I included this slide here. I don't know if I mentioned this before, but every SBA loan requires that each 20% or more owner of the applicant business personally guarantee the loan. And then potentially there might be some situations where if somebody owns less than 20%, SBA may require it or the lender may require it, but generally it's 20% or more. If you wanted to see what a personal guarantee form looks like, I've given you the link here. We permit the lender to use either our form or their form. And then to understand what a personal guarantee means, I've included this link to an Investopedia website. Okay, so that's the end of the 7A program application documents. For the 504 program, we're not going to go slide by slide on this. You wouldn't want to do that anyway, but this information is going to be similar to what I covered just now for the 7A program. But if you wanted to look for yourself, I've given you a link here to the form that the CDC fills out. with you. So you fill out pages 1 through 4, and then you'll see here I've given you the exhibits that you would be required. So 3, 5, 6, 7, 8, etc. So you can look at that yourself. But the CDC will actually outline that for you. That's just for your information purposes. And then for microloans, each microlender will outline for you what is required. So you should contact them directly. At a minimum, they will ask you to fill out an application, and then they'll ask you for additional documentation needed to assess your business and your requested funding amount. Okay, I mentioned this first bullet earlier because I wasn't sure it was in this slide deck. So, again, we've asked lenders for their advice to small businesses when they're applying for a loan, and I talked about the projections. They want to see that they're realistic and attainable. You should be able to outline your assumptions. The SBDC, as I mentioned, can help you with that. And then I mentioned most lenders will use industry data, like their they call it RMA data, to determine if your gross and net profit margins and some other metrics are in line with industry averages. And you can see I've given you this link here for the different definitions of those terms. The second thing they talked about or mentioned was the importance of submitting a complete application. So believe it or not, most of the time involved in applying even for an SBA loan is the back and forth between the business and the lender. So we would recommend that if the lender gives you a list of items, and let's say there are 5 items on that, you should get all of the 5 items together and then submit that back to the lender. Because what you think might happen is, let's say you submit 2 of those 5, you may think to yourself, okay, well, the lender's going to move that application forward, but they're not able to do that. They need all of the 5 items before they move it. So they're going to set it aside and work on someone else's application. So it's best if you gather all of them and then return that to the lender. I mentioned earlier we're going to provide you a list of SBA lenders. So this first link here is to a list that we maintain here in the Richmond, Virginia office. We cover all of the state except the Loudoun, Fairfax, Arlington area, but you may even find some lenders on this list that are located up there. In addition to that, we have a system called Lender Match, which could put you in touch potentially with some out-of-state lenders. We have many out-of-state lenders, SBA lenders that will make loans here in Virginia. So you'll click on this link. Unfortunately, you do have to have a user ID and password, but that's mainly to protect you. So you fill out a questionnaire about your business and the loan amount that you need, the financing that you need, and then any lender who has opted in for your location, where your business is located, they will look at what you've submitted, and then if they're interested in talking to you about that loan, they will then opt in, and then ultimately you will get a list of lenders that are interested, and then you can opt in for whichever one you want to speak with. But one caveat you'll see here in bold down at the bottom, this system is only used by SBA lenders, but what may happen is you may have an SBA lender that will try to refer you to one of their outside partners that's not an SBA lender, or another product that is not an SBA loan program. And we haven't talked about this, but you'll see it when I send you the loan chart. We set maximums on interest rates that lenders can charge. We set maximums on maturity and some other things. And once you get outside of SBA, those non-SBA options, the interest rate could be 30%, or the loan term could be 12 months, where you need at least 5 or 10 years. So I would just be careful. It's your of course option as a business owner whether you take one of those non-SBA options. I would caution you, of course, to avoid those ones that have the excessive interest rates. But just an FYI, if you have a lender that tries to do that, you could say to them, well, is this an SBA loan program? And if they say no, then just have to be careful about what's being offered. One final thing, I think this is the last slide. We publish on a weekly basis, I believe it's a weekly basis now, a list of, well, they call them SBA lending reports, and it'll show each SBA lender who's made at least one SBA loan in our territory, you'll see our territory there. And the way this can help you, a couple of ways, is it can help you identify lenders that are most active in our territory. You'll see here, we don't cover, as I mentioned, the Northern Virginia counties, so there's a link here to the Washington Metropolitan SBA office lending reports. You can look there. The other way these reports could help you is it'll show the average dollar size for each lender. So if you have a specific dollar range, especially sometimes small businesses are looking for smaller dollar amounts, that average dollar size could help you maybe identify a lender that's lending in that range. So there's my contact information. If you have any questions, you're welcome to contact me. And then we'll see what questions we have.
Thank you, Ford. Would you mind turning your camera on during the questions so folks can see you?
Now my screen's up here, so it may be a little challenging for me to do that, but okay, we'll see what happens.
Not to worry. So our first question is, if you currently have an EIDL loan that is current, does that disqualify you from applying for an SBA loan?
No, that does not. You're fine. EIDL loans do not overlap with these programs that we're talking about. So I mentioned the 5 million. Each business is limited to 5 million, but your EIDL loan does not count towards that maximum. And if you're current on that loan, it's not an issue. Not an issue.
Great. What would you tell them, I'm assuming a lender, as to how you will repay the loan? Because most likely a small business cannot repay it.
The lender is going to want to see that you can repay it from the revenue from the business. So you can repay it. you will need to indicate that you can repay it by either showing your historical financial statements or tax returns or projections. So if you're a startup, again, you can work with Allie's group. They can help you prepare projections, and that would show based on your research that the business can repay the loan.
Thank you. Next person asked if they are able to make appointments to sit with someone at the DC SBA office since they work next door. So I'm guessing general office hours question.
Oh, well, you can definitely contact them. I will put in the chat. I believe they even list their staff on their website. I will put the link there, and you're welcome to reach out to them. So let me find that.
Ford, this is Nick in the DC SBA office.
Oh, good. There you go.
Yeah, thank you. Yeah, I'm actually in the DC SBA office. I'm going to, there's a general information, but I'll tell you what, why don't I just put my email in the chat, and that's the best way to contact our office. All right. And yeah, and we do office hours. In fact, I just concluded one before this webinar. So yeah, thank you all.
Yeah. So how about that's direct from the source.
Love to hear it. And thank you, Nick. Ford, do you also do office hours, or anyone on your team?
So here's the challenge with our office. You're welcome to come here, but it's not user friendly. You have to go through security. We're in a federal building, and I've had some people describe it as almost like a strip search. I hate to say it that way. And the parking is terrible. But if you want to come here, I mean, I would say the better thing to do would be we could do it over the phone, or we could set up a Teams call or something. It's just not very convenient to come here.
Yeah, and just I'm sorry, Ford, just to clarify, our office hours are all virtual. We don't, there's no in person. We're in the DC. Yeah, same thing. So everything that Ford said. So everything is pretty much virtual. I think a lot of our resource partners, I'm not sure what Virginia SBDC is doing. a lot of the resource partners in the DC area, I think they do virtual only in terms of counseling. So yeah, like everything's like shifted to virtual post pandemic.
Right, and definitely for, as I mentioned earlier, for the help with your projections, your business plan, et cetera, that would be the SBDC or some of our other resource partners. Uh, and I guess I didn't put that in the deck, but I guess I could share that with Allie. But anyway, yeah. I would say for a district office, if you think it's bad to come here and get in the district office, I've been to DC and I remember standing in a long line to get through security, so that's probably not a
Yeah,
good.
it's gotten better and better for it. It's only gotten more secure. That's the
Right,
thing.
right. Okay, so next question, Allie.
All right, next question is, does the requirement to project profitability within 2 years for a startup also apply to 504 loans for commercial property?
I I don't think, let's see. I mean, generally it's going to be the same policy. I don't believe there's this, a difference for okay, I'm looking in the 504 section right now. So for projection-based projects, uh, there has to be an analysis of a minimum of 2 years of projection. So it does say 2 years of projections. I think that answers the question.
Yes. I know this is a common question that we've gotten from previous sessions, Ford. So, what is the turnaround time from start to finish to receive funding, approximately?
So I can tell you just for SBA, and this is where I try to avoid getting in the weeds, but what we have for the Express program, the lender is authorized to make those decisions on their own. So the lender is not even coming to us for the decision. They just enter some information in our system. So that would be minimal. For a what we call a small 7A, I'd say maybe 3 to 5 days. And then for larger loans, it might be up to 2 weeks. But as I mentioned earlier, what we hear from lenders is the real delay is the back and forth between the lender and the borrower. So it's not SBA's delay necessarily, it's the back and forth between the lender and the borrower.
Great, thank you. I have a question here asking about connecting a business with a commercial realtor in their area to assist with obtaining a sufficient property for them to assess feasibility to build their company.
I would say their SBA employees are prohibited from recommending or particular, realtors or CPAs or anything like that. But Allie, I think you can do something like, or I know our resource partners don't have that limitation as much, so I would check with them.
I was absolutely about to say, please reach out to us via email and we can connect you with someone in our network. Not necessarily a specific commercial realtor, but our advisors can help you identify the questions to ask when evaluating realtors. Make sure you're getting a good partner there. Next question is from someone in Texas. I know that this is Virginia, but does this info apply for all the different states?
Yeah, so all of the programs I talked about are the same in every state. The lenders will be different, of course, but the programs and the requirements are going to be the same.
Wonderful. Next question is, I started my bookkeeping LLC business in December 2025. Am I eligible to apply or is it too soon to do so?
So SBA does not have any limitation on the length that the business has been in existence. We're fine with startups. So it'll be the lender that you're communicating with. Yeah. I mean, let's say you go to a lender and they say, well, we don't do startups. And what are we in? We're in March. So you're pretty much within that time frame. So then you'll just have to go to another lender, find another lender who might be willing to lend for a newer business.
Thank you. next question, and I encourage folks to drop their questions in the Q&A and we'll answer them as they come now. But next question is, for the express loans, what is the uppermost limit of what can be borrowed?
So we're going to send you a loan chart which outlines our programs, and you'll see on that chart it'll say that you can borrow up to $500,000 under the Express program. I don't think I mentioned this earlier, but I want to mention it now. So if you have a need for a line of credit, the Express program is a very good candidate for that. If it's the 500,000 or less, because that program, as I mentioned, the lender gets to mainly use their internal policy for those express loans and doesn't have to use SBA's policy. So it potentially could be an easier process than our other line of credit programs. And then you can get a term express loan and a line of credit as long as you don't exceed that 500,000 in total.
Excellent. I'm not seeing any more questions in the Q&A at this point. But Ford, if you want to maybe touch on a couple of the most common questions that you get or most common challenging things that you see in loan applications.
Well, we talked about some of them. I'd say the projections are a big item because of unrealistic projections and maybe the underlying assumptions. I'm trying to think of, a lender gave me this example of this guy. A guy wanted to open a coffee shop, and he was going to put his business's, I don't know, logo, I guess, on these mugs or these cups that they could buy, and the price he was selling them for was just very high. And the lender tried to tell him, well, I mean, you're not I'm not, I shouldn't probably mention Starbucks, but you're not Starbucks. I don't know if you want to, who is generally going to want a mug or a cup just with your logo on it at that price. But he couldn't convince the guy that he should maybe lower that. But that's one thing. Let's see. We've got some more questions coming in. Do we want to?
Yes. So the next one is, if you have a business where you work from home, would you be eligible to get a loan?
Yeah, home-based businesses are eligible. We haven't talked about this either, but I talk about this when I'm doing the establishing business credit and talking about personal credit. If you're home-based, well, any type of business, you want to make sure that you keep your personal and business accounts separate. It's very difficult if you're commingling those for the lender to determine which is which. And so we if you're gonna we say we recommend that you open your own business bank account, have your own business phone number, different things like that. So you want to make sure that you don't commingle the assets of the business and your personal assets and debts and things like that. But a home-based business is eligible. I'll just mention one other thing on home-based business. So we've had this come up occasionally, and it's ineligible. We've had people contact us that maybe make some sort of food product, and they are going to run that out of their home, which is fine. But then they want to come and apply for a loan for, kitchen equipment or something that's going to be put in their home. That gets difficult. That's difficult because ultimately that's in your home. It's not a separate business property. So that is probably not going to go anywhere. I mean, potentially if you had something that could be removed, but usually when you're putting in a stove or something like that, it's affixed to potentially to the home, but that probably wouldn't work very well.
Good to know. So our next question is asking us to confirm again how to get in touch and schedule an appointment for someone in Richmond. For me, if you're looking to get in touch with the Capital Pathways program, I've dropped that information in the chat. You can do so through our website, which I've linked in the chat, or through my email, which is capitalpathways@virginiasbdc.org. Ford, how can folks get a hold of you or schedule an appointment?
I just put my information in the chat, but I guess what I'd say on that is, especially contact Allie's group if you're preparing. I mean, if you just want SBA specific information, you're welcome to contact me, but just the prep and the, business planning and the business plan preparation projections, that would be Allie's group, would be the best first, source for that.
Thank you for that ringing endorsement. I appreciate it. So we have a follow-up question to that business owner who's working from home. Would you be eligible for a loan if you work at home but have a separated building on your property?
So that becomes also a challenge because generally, I mean, I've seen it once, maybe twice, but I know I've seen it once where a woman opened a pet care, like a dog shelter. I'm not, what's the word for that? Anyway, and she had that building on the same parcel as where her residence was. And I did see that go through. I was actually very surprised because generally SBA doesn't want to see that where it's on a residential parcel. I would say that potentially is a challenge. I mean, if you subdivided it and you had the building on its own parcel, that would work much better. But I would just discuss that with the lender. It's I mean, definitely an SBA loan it cannot finance any of the personal residence, but you're asking about a separate building. So I would just talk to the lender about that. I think it's going to be a challenge there.
Good to know that there's a lot of nuance in that situation.
Right.
Next question is, as a startup small business, I'm currently working self-funded. However, the day will come when I land a big contract and I will need to borrow some money. What should I be doing now to prepare for that day when I need a loan?
Well, what we outlined today will give you an idea of the documentation that you would need to apply for that. Generally, when you're talking about contracting, I don't know if this is a government contract, but usually the challenge there is the contracting agency wants to see that you have the financing in place before they will award the contract, but the lender wants to see that the contract is in place before they will approve your loan. So it's a chicken and egg problem. I mean, if you have a contract in hand, you could just go to the lender and say, I need to cover 3 to 6 months, and they potentially could do a line of credit for you. So again, what we've outlined today would be similar for how to prepare, what to get together. And then always, again, the resource partners, Allie's group, can help you with that, helping be prepared for that.
Thank you. Next question. If the funding is for performance of an awarded contract, is the contract suitable for collateral? I think this is a follow-up to that previous one.
It is. So I don't know if this person is the primary or the prime contractor or the subcontractor, but if you're the prime contractor, yes, it definitely can be used as collateral. The challenge with the subcontract used to be that you couldn't get an assignment. The lender couldn't get an assignment of that contract as collateral. So there is some language in our SOP. I could provide that to Allie, and she can send that out when she sends out the other information, and you can read it directly. There are some cases where an assignment of that contract is not needed, and I'll make myself a note here. But definitely, if the lender can't get an assignment of the contract, then that can be used as collateral.
Good to know. Next person is asking, I'm in a multi-partner investment group with other partners. Our first investment venture was RV rentals, and the RV was purchased under one of the members' personal finances at startup. can we get that loan transferred under the business through any of these programs and potentially purchase future RVs for rental?
Okay, so first of all, when you say RV rentals, what comes to mind for me is you're buying an RV and renting it out to people, right? That's okay. Uh, okay, the one of the members bought the RV personally. So you can refinance personal debt. Generally, we see that in a form of a HELOC potentially, maybe, or on a credit card. Uh, but that can be refinanced uh, to bring it in under the business name. We do have extra requirements related to debt refinancing, so I don't know what the current terms of that debt are that the personal debt that they received. But depending on what those repayment terms are, uh, the lender would have to look at that. So let's say, just as an example, it was $50,000 loan and you got an interest rate of, I don't know, 3% or 5%. It's going to be hard for the lender and let's say you had a term of, I don't know what the useful life of the RV is, but let's say you had a loan for 7 to 10 years. It's going to be hard for the lender to meet SBA's requirements to be able to refinance that. So I would just talk to the lender about it. And then in terms of future rentals, okay, and I need to clarify, when we're talking about RV rentals, we're not talking about people living in these RVs. That would be ineligible. But if they're going to rent it out to, like go on vacations and things like that, that would be eligible. So I would just check with a lender to get into the details on that.
Again, another situation with a lot of nuance, it sounds like. Thank
Yeah.
you for that answer, Ford. Next question. If you are working from home as an independent contractor, but need a car for the work, can you apply for an SBA loan to cover the expense of a car?
Well, you can finance the business vehicles under our programs. You couldn't, you, I mean, you couldn't buy a car that you primarily use for personal reasons or personal trips, and then only partially for the business. But if you're going to buy the car, it was going to be designated as a car for the business, generally exclusively for the business. Vehicles are eligible as a use of proceeds.
Got it. And we do have another follow-up on that question about a separate working space or working structure on personal property. The question is, could that separate building on the property be seen as a lease? As far as leasing it from your personal property to someone else or leasing it from your personal property to yourself rather than leasing it from someone else.
In that case, all you're really doing is I would say no to the answer to that, because you have a business. Let's say it's a woodworking business, and you're going to. Yeah, I would just say no. Generally, I don't think that would work.
Okay.
I mean, again, some of this gets too much in the weeds. I would, if you want to call me, I've got my phone number there, and we could talk about it in more detail, or you could contact a lender. But I would say that would probably not work.
Alrighty, so that is the last question that we had in the queue. Oh, as I said, that another one came in. Someone is asking, should I use personal money to secure a loan? So I'm guessing as collateral.
Well, that's a good thing, which I haven't talked about either. So, and this is a frequent misconception when you're talking about equity a cash equity injection versus collateral. So when I talked about an equity injection earlier, that's where, I told you the SBA sets 10% for startups. That's where the lender will be required to see cash coming in from you for 10% of the total cost that you'll need to start the business, and that will be cash. So that's different than collateral. And what will often happen is the business will say, okay, I own a home and I have 25% equity in that home, built up, the market value less the debt you have on it. That collateral is not the same as an equity injection. Collateral is separate. That's where the lender will potentially take a lien against that property. And then if the business defaults, and they liquidate the business assets, and they've taken your house, let's say, as collateral, they will then look to that house. They will sell it potentially to recoup, the remaining balance on the loan. But collateral and an equity injection are two separate things. So for instance, if you have that 25% equity in your house, you can't say to the lender, okay, that's my equity injection, but I'm not going to actually inject any cash. I'm just going to leave that sitting in my house. That will not work. You will actually, in other words, an equity injection is cash injected into the business, not just sitting there available to the business, if that makes sense. Allie, you can tell me if that made any sense.
Yes, it does. And we actually have a follow-up question for that. The asker is in the process of doing a home equity cash out refinance to unlock capital that they plan to use as the foundation of capital stack for storm surge supply. What is the best way to structure that capital so lenders view it as strategic leverage rather than risky personal debt?
Okay, so one thing under the 7A program, SBA will not allow, or does not generally like to see borrowed equity. So they will allow that home, let's say that's a HELOC that you're getting to get the cash out of your home. They will allow that to count as an equity injection if you can show repayment of that HELOC from a source other than the business. So SBA will not even permit you to use your salary from the business to repay that HELOC. They want to see a completely independent source of repayment for that HELOC, and then you could count that as equity, and that would not be an issue. I don't necessarily think, again, if you can show repayment of that personal debt, I wouldn't necessarily think that the lender would see that as risky. In fact, under a 504 program, we do allow borrowed equity, but it's just in terms of the 7A program, we want to see that you can repay that HELOC or that personal debt from a source other than the business that's applying for the loan, including even your salary.
Good to know. Next question is, if you've been working from home as an independent contractor on and off for 20 years, would you consider that as a startup if this is the first year of them applying for a loan?
Um, I would say that may depend on the lender. SBA, I don't know that we really have an opinion on that. So the main thing that the lender and SBA will look at is, you say you're acting as an independent contractor, where you actually, if you filed your own tax returns, and you have business information for that, they can look at that information when they're considering your application. So I would say just discuss that with the lender. Okay. I guess what they're getting at is for the 10% injection. Okay, so here's another piece of information. So the 10% that I mentioned does not apply to SBA Express loans. We don't set a minimum under that program, but again, the lender may. So you can talk to the lender about potentially using that programs. But I would say definitely the track record that you have over the last 20 years, especially if you can show financial information for that time period, well, at least the last 3 years, that would help you in that respect. I think the lender may have their own opinion on whether they consider that a startup or not.
Thank you. So we have a follow-up to the question about the home equity cash out refinance. And it looks like the person is hoping to structure the incoming capital so that line of home home equity cash out as like a salary from another source of income. Is
Okay,
that
so
something that they could do?
an example of that. So let's say this person is married and they're going to get a HELOC for their equity injection. If I have already said that you wouldn't be able to count your own salary from the business that's applying for the loan, and the business can't pay it either. So if your spouse's income can cover that HELOC, then that would be enough to meet SBA requirements. The SBA is just wanting to see some other source of repayment, again, other than the business or your salary from the business. So again, if you're married and you can show repayment through that, then that would meet our requirements.
Follow-up question to that is, does that external source of income include something like pension income?
Well, okay, so if you're receiving a pension and it's not, yes, that's not coming from the business, then that potentially could be a source of repayment, yes.
Okay. And what about if it's the same person, so not a spouse, but the same person paying money in from another source of income, so another job perhaps?
Right, as long as it's not, so let's say you're the owner of the business and you have uh uh a pension or a side job, something like that, and that can cover the HELOC, the equity injection, and that would be fine. They just want to make sure that you're not pulling money out of the business or even your salary from the business to cover that equity injection because, well, they just don't want to see that. They just don't want to see that. Yeah.
Got it. Similar question or another equity injection question. Is there an equity injection for a microloan?
So SBA does not set a minimum under the microloan program. I don't. It would be up to the microlender, but generally, since I don't know, I don't have an answer for that because I would have to ask our microlenders, but they will let you know what it is. But we don't set a minimum for the microloan program. That would just be the working with the lender.
Got it. Alrighty, that is the last question we currently have in the queue. So touching back, since we have some time, on any of the frequently asked questions or frequently seen scenarios that you could share with us, Ford?
Okay, so we talked about projections, we talked about equity and collateral. Trying to think of what else I could mention. Whatever. I don't know. Let me see. I'm going to look back at my slide deck, see if there's anything else I may have missed that I want to cover.
Yeah, especially if there's anything more in that 504 section that may be informative based on some of the questions we've gotten.
Okay, well, I didn't. Okay, let me share the slide. I mentioned that the 504 program is sometimes called the 50/40/10 program, and I did talk about a lender will provide you with. I can't get rid of this box. How do I get rid of this box? Will provide 50% of what you need, and then SBA will come in for 40%. I don't think I got to the part with the 10% part. That's where on all 504 transactions, the business will have to provide a minimum of 10% equity injection. So that's on the screen now. Let's see if I can. So your injection would be for all businesses, it's a minimum of 10%. Again, I mentioned that under the 504 program, we do allow borrowed equity, and we don't have that limitation that I just mentioned under 7A, where you can't pull it out of the business. There is a stipulation that if you are borrowing your equity and you're using the property that you're financing through 504 as the collateral, then that borrowed equity cannot be repaid faster than the SBA 504 loan. So that's the main stipulation on the 504 side. See what else.
We did have a question come in, if you'd like to jump to that. Which is quicker or easier for a startup to get, a loan or a grant? And I think you touched on this at the beginning, but does SBA issue any grants?
No, we do not issue any grants to small businesses. So there used to be, we used to say, I didn't really know of any sources of grants. What you may find more in localities around Virginia are they have these pitch competitions, and maybe Allie has some experience with this, where, for the top three winners, if you want to call it that, they will give, maybe 5, 10, or 15,000, some dollar amount to them. So we are seeing that. And I know that I think down in the Hampton Roads area, they may have some grants for what they call facade improvements. So to improve the outside of the building potentially. I'm trying to think of, let me look at my.
Yeah, so for startups, to speak to that pitch competition that you're speaking or mentioned, we've been hearing a lot more of like chambers of commerce giving small startup awards to businesses that kind of reinvest in the community through their business. But for startup funding, please do reach out to me and I can connect you with some of our advisors who can help you identify some of those best sources of startup funding. But yes, what we're seeing is largely grants aren't really out there for small business startup. It's usually investor capital or loans.
You may find some things like, we're not the experts on this because these are not our programs, but I just have an article here about there's a bond secure, what they call seed program for a certain area of Richmond where I believe they're potentially providing grants to small businesses, but that would be something you would need to research on your own. We don't keep a list here of those because they're not our grant programs. I would say there wouldn't be a whole lot of them, but potentially you might find them.
And again, the Capital Pathways advisors are well versed in kind of the variety of resources that are out there, and they're happy to help you do that research. And then question came in just asking us to restate that information. I'm not sure what part of it was being asked.
For bond secure. Okay, let's see. I wonder if I could just put a link in the chat.
Yep.
I may be able to find a link here. I mean, this thing is an article, our whole article. Let me just see if I can Google it. Yeah. So hopefully you'll be able to see this. Yeah. Okay. The problem is this article appeared in a local publication called Richmond BizSense, and now it's behind a firewall. So whoever that is, if you want to give me or Allie your email, I'll send you the article. Yeah.
All right. In the meantime, we've got another question that came in. I'm a VOSB and looking for a grant that is for veterans to open small business instead of grants for small businesses supporting veterans. It seems like there's not a lot of grants that are available for veterans. Is that correct? So again, we talked about there's generally not a whole lot of grants for small businesses out there, but do you know any that are veteran focused?
Well, again, we don't maintain the list here, but I would Google that. I mean, when I just Googled that and see, here's the problem. When you Google things, you get the AI overview and you don't know the reliability of this, but let's see what this says here. National Veteran-Owned Business Association I would say because that's not our program, I'm reluctant to. I can tell you that we don't have any grant programs for any type of small business, but you may be able to research that yourself. And again, did you say you could help with that, Ally?
Yes,
Yeah.
our the Capital Pathways advisors can absolutely help you do some of that research and identify some of those financing options that would be a fit for your situation.
And I think Francine, she's the one who wants the article. So I will send that
Yes.
to you. Yeah, I will send that to you.
And then we got a question, can you please put your contact info to reach out or a link that can be accessed when it comes to grants? So for that question asker, if you could share your email address, we can also send you that article as you requested. But generally, I recommend looking at, so we've already put both of our contact info in the chat. Can do so again.
And then just Ally, in general, there is a website, grants.gov. It's not our website. And I have to tell you, a lot of these grants may be because SBA does uh, award grants, but they're not to small businesses. What they are is they go to entities that counsel small businesses or help small businesses in some way. So I don't know how many grants you'll find at that website, but you could go to grants.gov and see they're not going to be SBA grant programs for small business because we don't have any.
Yeah. So as an example, the SBDC is one of those organizations that gets grant money from the SBA to support small businesses.
Yes.
I think it seems like a lot of these questions are coming with respect to that seed funding or startup capital.
Oh, okay. I
Could you
will, you know what I'll
clarify?
do? I'll just send this article and you can send it out to everybody. But again,
Happy to do that.
we have to be careful because we're not allowed to endorse any program over another, especially if it's not our own. But I just found that article somewhere and you're welcome to read it. It's for uh, East End businesses in Richmond.
Okay.
Yeah.
Could you clarify a little bit about the 7A and the 504 loans and how they relate to like startup capital?
Okay, so again, SBA is fine with startups. The lender is likely to, the lender will tell you if they lend to startups. So we talked about the equity injection under 7A, that's 10% for startups. And then on 504, you can't have a startup under the 504 program. I mean, bottom line is a startup is eligible for all SBA programs. So it's really going to be the lender that will decide whether they will lend to a startup, even with SBA's guarantee. And then they will outline for you, the projections and things like that that will need to be provided.
Got it. And for everybody's general awareness, the Capital Pathways, it does have kind of a list of both SBA lenders and other lenders that we can help connect you with to identify that best financing option for your startup needs and for any business needs in general. So we are kind of in the last minute of our scheduled time, and we do have one final question. So I will, at this time, close the Q&A. Last question is, if you have an EIN but not a business email, would you be eligible to get a loan? And how does a person get a business email if it's needed?
So yeah, you don't necessarily need a business email to get a loan. You do need the EIN. And then Allie, could your group help them with the business email, getting a business email? So
Absolutely, we can help you get that set up.
I would contact Allie's group for that. Yep.
All righty. Well, Ford, thank you so much for all of these excellent answers and for all the wonderful information you have shared with us today. I believe we have another session of this type of webinar on the books
Yeah.
next month. And if folks are interested in our other webinars, I highly recommend checking out our website. You'll find the links for those there. As I said at the top of today's session, the recording and slides and any handouts or links that Ford has mentioned throughout today will be coming to you guys in an email shortly. And if we weren't able to respond to any of your questions, please do reach out to me via my email or through our website. You can also use those avenues to schedule an intake call with me, or just ask, as I said, ask any of your questions. So with that said, thank you to Ford and Nick for your support. And thank you to all of our participants for joining us today.
Okay, thank you, Allie. Have a good day.